Awesome. All right, we'll go ahead and get started. First thing I want to let you know here is I am experiencing some significant lag in my NinjaTrader today. I'm not sure what is going on. I updated my computer, restarted it, cleaned everything out. I'm going to have to go back in and find out why, because it's specific to NinjaTrader. So bear with me as we get going and things don't move very quickly. I close down as many charts as I can, and it's running pretty slow. So wait for NT8. I'm gonna have to. I'll figure it out. For some reason it's just running slow today. If I have to recreate charts, I will. But I just wanted to give you that information as we get going, just so you're prepared for that. Okay, a couple of things here. We're going to go over something a little bit different. So I've been away, not trading for a couple of days, and that's going to happen to you as well. So you're going to be gone. You're going to get sick. Something's going to happen. You're going to miss a couple of days, and one of the things we've always talked about is context, 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 and understanding context is important. And doing this homework day by day is the thing that allows you to get context. So what do you do if you've missed a day, right? What do you do? And what if you do if you've missed a couple of days and you need to get context, you want to come back in and figure out what is this market trying to do? How good of a job is it doing it? Anyway, be able to set a plan for the day. So one of the things I wanted to review that we've talked about before, and one thing I want to show you that I added to my chart here. I added this column or this row down here called daily volume. And in order to add a row, all you have to do is go underneath, like to 28 here, and right click on your chart and say insert. And that will actually insert another row. So I'm going to go back, and then you can just put in daily volume. So there are 4 primary pieces of data that I look at. I just got my target filled. Wasn't paying attention. I went short up here. Yesterday's close right here at 89.50. I could see the seller stepping back in. The offer got weak, bid got strong, so I went short up here. Took a little bit off at about 1.25 here, and then let the last one run down to. Yeah, that's about where I wanted. I was looking for a target of 86.25 down here. And so I had my target here at 86.50. So it's a start. That's why I took that short, is right off of yesterday's closing swing. Just real quickly here. Well, there's nothing quick when it comes to my Ninja charts today, so bear with me. Closing swing high was 1989.75. Closing swing low was 1988.75. So that's why I took that short. All right, so as I was saying, there are a couple of things. There are 4 data elements that I always look at and that I focus on. So what I did with my homework sheet, now it's Friday. I haven't traded for several days. So what I did is I went back and I just put in the information relative to those 4 pieces of data, but included yesterday's data. I didn't put opening swing high low. That's not going to be relevant for me this morning. But I filled in the other pieces from yesterday just to kind of get a sense of it. But here's what I'm looking at, and this is why I added daily volume. So remember my point before is I can tell what a market is trying to do and how good of a job it's doing just simply by these 4 data elements. Overall, I can get a high level context. So even if I just look at the data here, starting, this is last Friday's data, but Monday's trading, and I look at the open, I can see opening 59, 62, 72, 75, 85. So what's this market trying to do just from the open? Well, it's trying to go up. How good of a job is it doing? It's doing a pretty good job. Now the close is something I weight a little bit heavier than the open because a lot of activity can happen during the day, but it's the close. Where does this market settle in on? What is it really trying to do? I put a little bit more weight on the close than I do on the open, but I'm looking for some context. So if I see something different between the close, let's say I keep seeing close higher, 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 but open maybe higher, one's lower, higher, lower. Now I'm looking at a market that is trying to move higher, but has a little bit more volatility. And this one doesn't. So when I look at the closes, 52, 67, 77, I'm rounding here, 83, 89. Well, that fits with what I'm seeing, which is, and I can see it in the charts, this is pretty easy. This market's moving up. It's doing a pretty good job. Same thing with VPOC. Every day we've moved up with VPOC. And this is why I added volume. So when I look at Friday's range, and there must have been another news event, there were 1.62 million contracts on Friday. And Friday had a, let me bring this over. Hang on a second. Friday had a pretty big range as well, but 1.62 million contracts. And for August, was that the 15th, 16th? That's a lot of contracts. And so when I look at this day, I look at the open. This is the one day out of all of these days, where the open was at 59 and the close was lower. So this open, 62 closed higher, 72 closed higher, 75 closed higher, 85 closed higher. But now when I look at these other days, this whole week, under a million contracts, under a million contracts, under a million contracts, under a million contracts. The amount of volume that has been pushing this market, the ES, higher over the last 4 days is pathetic. It's dismal. And you would expect the volume to be low this time of year. The last 2 weeks in August, there's a reason people go on vacation. Their volume just gets sucked out of the market, and it's a tougher time to trade. So I would expect lower volume, but this is unusually low. This is just over half a million contracts. But what this is telling me is we still have an appetite, a heavier appetite for lower prices than we do higher prices. Now, if you remember that analogy of the Super Bowl tickets a while ago, and remember how price went up, 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 people kept dropping off, and there were 2 bidders left who took price of those tickets up to $50,000. Well, the principle behind that is that it just doesn't matter if there are a few participants left, because a few participants can take price as high as they want, as long as there are not enough aggressive sellers who believe that value is lower. And so what this market is saying is, up to this date, up to today, even though prices are at all-time highs, the amount of participants who believe price is higher is waning. It's thinning. It doesn't mean that price is going to turn around and go down, but it does mean, and especially, and this is what I'm going to get to for today, what it does mean is that this market, and you can see it right here in this day compared to these days, this market is highly sensitive right now. And any bad news, any kind of move to the downside sees a lot of piling on, significant amount of activity, or significantly more activity. I mean, this is almost 1 million more contracts than these other days. So that's my overall context for the day. And there's the Ukraine issue is out there. The You just never know when ISIL will do something and create another stir. The issue in Israel and Palestine, you just never know when one of those news events are going to create a shock in the market. And that may happen today. But the other thing that we have today is Janet Yellen. We have no real news today, but we do have Janet Yellen, who is going to give a speech today. And there's going to be likely a lot of eyes on whether or not she is relatively hawkish or dovish, but a lot of activity, maybe not volume, but a lot of people listening to what she is going to say and try to get a sense of when might we see interest rates go up. So what that means to me is one of the things that will kind of give me some sense of direction. This is going to be a little bit silly, but follow along with me. Let me get to it here. Again, my charts are running really slow, so it takes me a little bit of time. So my general context of these last few days is that as the market is moving higher, we have less volume. If the market starts dropping, I'm likely to see quite a bit more volume and piling on today. That's been the context over the last couple of days. So let me hang on a second. This is just running so slow. So what I'm going to be doing is not only looking in the print and looking at the volume, but remember I use this as kind of a trigger to look for, just give me a sense. I'm not looking for anything absolutely specific, but give me a sense for what might be happening in the market. And so this is, again, the simple 1 minute chart. It just has volume bars. All I'm looking for is at the open, in the first 10 to 15 minutes, what kind of volume do we see in the market? And if I go back to yesterday, I believe I told you before that I put a line up at 10,000 contracts. And I'm looking in the first 10 minutes, and this is just typical of the ES, I'm looking for at least 1 minute within the first 10 minutes of a volume spike of 10,000. And sometimes there's more, sometimes there's less. Not less, but I'm looking for at least one. Sometimes there's more. But that's going to start just to give me a sense going into the morning, looking at how price might be moving this morning. If I see a significant drop in volume, meaning volume is pretty low, then that is going to give me kind of an initial thought that we may see prices move higher. Here's look at yesterday. It was, I think the first minute was 7,000, 7,300. If I start seeing a lot of volume, and that volume is associated with price movement to the downside, then I'm going to start to look for price to be accepted lower, because the likelihood is we're going to have more people piling on, and we're going to have at least some level of test to the downside. You can see in the first, I don't think we saw a spike of 10,000 all day yesterday. So this is one of the tools that I'm using. It's a simple tool, but I'm looking just to get a sense. Do we have high volume? Do we have low volume? And if we have low volume, well, whether we have high volume or low volume, I want to look at relative price action. And what I know about this market is this market right now is apt to pile on if people or the participants believe that price is heading lower. If there's value lower, we're likely to see more volume. If this is going to continue to eke up and we're going to get to 2,000 on the ES today, what we're likely going to see is maybe some level of test to the downside, but we're likely going to see low volume, minute by minute, and we'll see it in the chart in the order flow chart in the print. But I'm going to expect to see price grind higher. Now, the one caveat here, and actually there are two wild cards today. Well, when you include the international stuff, there's probably 5. But for our economy, we have Yellen speaking at 9 Central, 10 o'clock Eastern. And then later in the day, we have Draghi speaking at Jackson Hole as well. So the financial community is going to be looking at Draghi and seeing if the European community is ready to step it up, if they're going to acquiesce. And so when he starts speaking today, I believe that's about 1:30 Eastern, we're likely to see some fluctuation in price. So we've got those two wild cards today. And what we might see with Yellen speaking is a moderate range this morning, a moderate range until she starts speaking, with some volatility once she starts speaking, or as she's speaking, if she gives the market what it wants, we may see price just move up. So all I know is that they're a wild card. And I know that price is either going to stay where it's at, rotate, it's going to move higher, or it's going to move lower. So the reason I add the context of Yellen and Draghi is because it sets a tone for me, especially when I look at the week, right? When I look at this context and I see this market that is bigger range, its propensity to move lower faster on higher volume is very real. Its propensity to grind higher on lower volume is evident. So if I can't control the news, I can't control what's happening in Palestine, I can't control anything. But what it does for me is it gives me an undertone of higher risk. So during the times that she is speaking, Draghi is speaking, I just have to know that they could say something, and it's also an opportunity, brings a higher degree of opportunity. So if she says something that is very hawkish, like for some reason they could see bringing interest rates up sooner than later, something that the market doesn't expect, that could be a pretty significant opportunity to the downside. Same thing with Draghi. So everything in the context of the current market is that we have this melting higher on low volume, but any sign of weakness, any sign of fear, and we're likely to see volume spikes, and we're likely to see price moving down in a bigger range. So with that as my context, I look above yesterday's close. I look above yesterday. You can get daily volume from the CME site for the ES. But I look above yesterday's close, and there's nothing. There's nothing. There's nothing from yesterday. There's nothing prior. We're at all-time highs. And the only thing that I can take away from this market in context is if we start moving higher beyond 92, which is yesterday's high, and we might do that because it didn't look finished up there yesterday. If we start doing it, we're to grind higher. And 2000, absolutely. If Yellen says something that's incredibly favorable to the market, we may move faster. But up past 92, this is likely going to grind higher. Maybe 2000. I don't know. But I have nothing. Nothing above really this level. So what that tells me is if price opens up above 89.50, right, and I'm going to go with my close over here, yeah, 89.50 to 89.75. If price opens up above that level, then I have absolutely zero pieces of context from a high volume, low volume area above that level. Doesn't mean I can't trade. It just means that, except for yesterday's high, I have no context whatsoever. So the only piece of information, which is really thin, is 92 above. And if I look at the profile from yesterday, 92 didn't really look quite finished to me. But that's my only context. So I have to understand that above 89.50 today, there's an added element of risk. So I've got a couple of things today that is going to add risk to my profile. So I'm trying to be as objective as I can going into today. So what it tells me is if we open above 89.50 and price starts moving higher, I'm going to need to be really mindful of stops, and I'm going to have to watch the print very intently. So my focus on today above 89.50, say 89.75 above yesterday's closing swing high, is going to be two data elements. It's going to be the order flow, and it's going to be the intraday volume profile. That's it. That is going to be my only two data sources. Now, if price opens up or starts moving below this area, now I have, from a low volume area, this level, and it's pretty consistent at 86.20. Well, it's consistent because the data is so thin. 86.25. So again, when I looked at my my stop here, or not my stop, but my target here, I put my target at 86.50. I put it one tick in front of this area, this low volume area from yesterday. Thanks, Alberto. I don't know what I'm going to do with NinjaTrader. I may have to get to the point of reinstalling it. We'll see. So if we have a test to the downside, and actually we just had one, everybody see why I put my target here at 86.50? Yes, no? Okay. And there, just to show you here, here is the 86.50 level right here. You can see just a little bit of low volume. But you also notice that 86.50 was the previous high. So there's a couple of data points that says that this has some relevance. Now looking at this volume profile, if we start dropping below 86.50, 86.75 today, and price comes back up to test this and the offer gets weak, and the bid starts to get strong, then I'm going to look for a short back down towards 82. I'll look to try to take some off 82.75, 82.50 out in front of that, and see if this can't test down a little bit further down to 1980. So one of my first conditions, and my if-then, revolves around this 86.50 as well as up at that 89.50. So if we open up above 86.50 and below, say, 89.75.90, I'm going to look for, I'm not automatically going to, but I'm going to look for a long off of this 86.50 area. Now when I look at the context of the morning, and I look at what happened in the pre-market right now, looks like other people have been having trouble with Ninja as well. Yeah, I'm not sure. But again, so as I look at this market, I look at what just happened. Look at all this activity at the bid. And what I'm doing pre-market is I'm just comparing this activity to to other activity around the same price. And I can see a little bit more aggression, but that was held. So this 86.50 level looks in the pre-market to be a valid level. I mean, look what happened when price came down. This is down to 85.25. And this is where the momentum was to take it up through that level. So I'm going to look for a long opportunity. If we open up above 86.25 and below, say, 89.75, I'm going to look for a long opportunity. It doesn't mean I'll automatically take it, but look for a long opportunity between 86.25 and 85.25. And the reason I'm using 85.25 is because of this context right here. And if I go to thought I had this morning's volume profile up. Oh, I do here. There's really not. Here's the volume profile. It's just taking me a while to drag it over here. I have to drag it over 3 screens. Come on. There's a low volume area right here around 86, so that's consistent. So 86, 86.25. But below that, there's a little nodule here at 85. So again, between 85, 86, but this market is kind of proving that we could get some slippage. The other thing to note is if in the 1-minute chart I see really low volume in the morning, then you need to understand on the ES, if we have really low volume, the ES is going to be have higher ability to slip these areas because it's easier to take stops out with lower volume. If the volume is relatively normal, then again, I'm still looking for a long between 85 quarter, 86 quarter this morning. 86 quarter lines up with the overnight. And again, what you have to remember is this is really thin volume. This used to be the all-time high up here. So this is really thin volume that we're looking at historically. But it's the only piece of context that I have. So again, what I'm not saying is I'm just automatically going to take a long. But I am going to look for a long opportunity between 86 and 85. Now, if we start dropping, price starts dropping down below that level, and if we open up below, if we open up between 86.50 and say 85, if we open up in this range, I'm not doing anything. And it's not that I'm always looking for a range which I want to sit on my hands, but right now I'm looking at this area, it's based on this pre-market and yesterday, as a potential battleground. When I look at the bottom of value is down to 80, 87. Yesterday there was a little bit of a low volume area around, again, 86.25, and the open was around 85. High of the previous day was 86. So that whole area to me looks like it could be a little bit of a battleground, could be a little bit more volatile, and I would prefer to look, based on this chart, if we come down to 85 and below 85, right, this level, then, and we're getting, volume and the intraday profile below this level, then I'm going to look for a short between that 85 and 86 quarter, 86.50 level. and look to take that short down to at least 82.50, possibly a test back down to 80 and a quarter. Can I explain why I took the short trade? Yeah, that one's pretty easy. Yesterday, this was the close at 89.50. My closing swing low was at 88.75, closing swing high at 89.75. So this is a potential area for me to go short anyway. When price came up to this level, I saw strength at the bid, and not insignificant strength. I mean, when I look at the relative number, that was some pretty heavy activity, pretty heavy aggression on the sell side versus weakness at the offer. So I took this trade because my risk reward on this trade was a point. And my risk was a point, and my potential reward was 86.50. So I was looking at a 3-point or a 3-to-1 risk reward. That's why I took that trade. Does that answer the question, Sanjay? Oh, Thomas, thanks for that. Thanks for that link. But there are so many buyers in that bar below. Yep, and as I was watching this tick, and I was watching the relative growth of buyers and sellers, if you will, activity at the bid and activity at the offer. And there's no way really for me to explain this. This is, I would tell you to watch the charts at your area and watch how the print develops. But it was relatively apparent to me that buyers were being held at 89.50. Plus, again, when I looked at it just from a risk reward standpoint, if a lot of activity would have come back in at the bid, at 89.75 and 90, I might have just closed that trade for a 2-tick loss. So the risk reward on this trade was really good. Remember, I'm looking for, I'm looking to get 500 at least out of the day, and I saw an opportunity to get a jump start on my target for the day. And that's another thing. I'm now $225 away from a daily target. And now the other thing that does for me psychologically, if I were down, it would affect me psychologically too. But what this does psychologically is it allows me to be more objective, maybe even wait for after Yellen is done speaking today, or wait for IB to be set. Yeah, and watching the print and watching how price moves relative to how the print is growing is literally reading the print. And reading the print, while I can give you principles and I can talk to you about guiding principles and elements, and the volume profile has all these elements. Every market is incredibly unique, and every auction is incredibly unique, and every day, even intraday, at the highs and the lows, it's going to be unique. But as you look at the print and you read, you learn to read it, and you look at the activity. So you're watching how the bid grows, you're watching how the offer grows, you're looking 2 to 3 prices up, down, you're watching price move, inherently you will begin to understand that if price moves up and we see buyers lifting the offer, you will start to understand how they're being effective or not effective of lifting that offer, and the relative counter at the bid. You are going to be able to understand and read that, yes, this is a better trade than if what you're reading is that maybe I can say it this way. So if I were looking at this trade as I was, and I was reading the print, I'm looking at the prices, I see weakness down here at the bid, I see strength up here, but I see weakness above at the offer. So at this price at $89.50, I have interest on both sides. And when I looked at the activity here, and I looked at the activity here, right? There's always two prices at any given time in the auction. When I looked at the auction going on in this pair, bid and ask, and I looked at the auction going on in this pair in the bid and the ask, my conclusion was that the sellers looked as if they had more aggression and looked as if they were going to be able to move price. And that even though there was strength at the offer, the relative strength, and not just in the colors, but by the way price was moving up here, this relative strength to what the activity at the bid was doing wasn't sufficient. Now, there are going to be times when I'm looking to take a short and I'm going to read what's happening in these price combinations, the bid and the ask. I'm going to read what's going on, and I'm going to see an immense amount of pressure at the offer. And based on how price acts, a couple of prices lower, a couple of ticks lower, I may decide this isn't a good short because the amount of pressure. And so, for example, if price can only tick down one, it's ticking down one, and popping right back up very quickly, and I can see activity really growing at the bid here, even if activity is growing at the, at the offer, even if activity is growing at the bid right here, but every time it's moving down, it pops right back up. Compared to price sitting up here, taking a few seconds, and then coming down. And again, this is just experience. That activity is going to give me a signal of whether or not that short may work better than not. Now, again, I don't know what's going to happen in any trade. I don't know, especially when something like this happens. I don't know that there aren't going to be a significant amount of buyers standing on the sideline who are just going to come in and push price right up through this area. But the other thing, and I want to make this really clear, the other thing I'm looking at here is the risk reward on this trade was excellent. And the way that the auction was evolving here suggested also that I had a great ability to control my risk significantly if I started seeing a shift in how price was moving relative to the auction. So if I started seeing price tick down right back up, tick down right back up, and significant activity growing at the offer, and all of a sudden the bid is growing, but it's growing slower, and now price pops up, I'm seeing more activity at the offer up here, it's holding up here for a couple seconds, then drops back down, and price activity is now between these two prices. It pops up, activity grows up at the offer, pops down here, and when it pops down to 89.25, it's a brief second. It goes down and boom, right back up really quick. What that's telling me is there's a significant amount of pressure to the upside. In that case, I don't see buyers relenting. They're still pushing, which tells me I have additional risk in this trade. But I didn't see that. So it's hard to explain. It's an experience thing, but does that help you to understand what I'm looking at as I'm reading the print at my level? Okay. And that just comes with experience. But that's what I'm looking for as I'm reading the print at the level. I want to be really clear about that. At the level I want to trade. That is what I'm looking for. That is what I'm quote unquote reading. That tells me, this trade looks like it may work. Remember, I don't know what's going to happen, but it gives me some understanding of what might happen. And again, I can only see up to the most current print, and I have no idea who's standing on the sidelines. So again, anything can happen. But the more important piece of that was it was a level I was looking to trade. The risk reward on that trade was very good, very, very good. And the way price was moving up at that area gave me enough confidence that if I wanted to, I could manage that risk to 2 ticks. And so as I'm looking at a target of 500 for the day, 2 ticks with 3 contracts, I'm in good shape. Psychologically, I'm in good shape. I'm down a little bit, but that's okay. As opposed to, being down, even if I'm down 150, that's a point with 3 contracts. That's not significant. And the other thing someday that we're gonna talk to a little bit more is taking your daily trading plan and then aligning your daily trading plan with your financial target for the day, what's your objective, and what your risk tolerance is. I hope that makes sense. Because now as I'm looking at my day and I'm looking for 500 on the day, at least, that's my target. Now, it very well may change which trades I take. So for example, again, I may decide to wait, that it's worth my wait, knowing that there's more risk up until the time and probably through the time that Yellen speaks, up to about the time that Draghi speaks. There's higher risk because anything they say can frighten or encourage this market in one direction or another. So I very well may look at this and say, higher risk, the volume profile may look good, things may look great, but it's a little higher risk. I'm better off waiting for IB to be set and for them, Yellen to stop speaking, look for the market to settle, and then look for my 2 1/4. But my goal is to get to that objective every day. And the way that I do that is I plan my trades and I manage my risk. And when I do that, most of the days I can wind up green. So there's, when I'm looking at trading, I'm not just looking at a trade and saying, oh, this should go 5 points. I'm going to take it for 5 points. I'm looking to get to my target. I'm looking to take profit off. And, every trader is different, and every trader has a different strategy. But what I have found is that when I manage to a number to the upside and to the downside, that number will help me take profit. It'll help me get out of trades and wait for the next one. And maybe this is a 2-trade day for me today, and I'm at my objective. And if I'm at my objective, I have a significant advantage on the day. And as long as I remain objective, I could get up, walk away, finish for the day, do whatever I want. Or I could also look at this and say, I'm done in the morning until after Yellen speaks. I'll come back and look at it. It gives me more options. And again, when I'm managing my risk, and I know how much I'm willing to take a loss on for the day, where my max loss is for the day, I I don't have to worry about where I used to be when I first started trading. I don't have to worry about me taking my stop and dropping it or raising it because I think something is going to happen or I want or need something to happen in the market. And if the market is just different, if there's so much volatility, there are short-term players in the market just taking stops and nothing is making sense and I've lost and I'm up to 250, 300 for the day in loss, I have no issue with just being done at all. No issue at all with just being done. Because the probability is, number one, my psychology is going to start working against me. And I don't care how much experience somebody has, the psychology is going to start working against me. And number two, if what I normally do in reading an auction isn't working, then it's really foolish for me to think that anything I might do going forward is going to continue to work, right? That's insanity. The other thing I might do is move to a different instrument like CL that might be auctioning more normally, within its ranges and respecting specific levels and areas. So I might do something like that as well. All right, how much weight did I give that entry as yesterday's IB high was 89? Actually, that's a good question. I didn't give any weight to yesterday's IB high when I went into that trade. I looked at the overnight activity. I looked at how this was auctioning up at this level. I looked at the overnight profile. Where is that thing again? There it is. We have VPOC at 89 right now. So we were getting a lot of movement. I'm sorry, not a lot of movement. We were getting a lot of activity trying to push price higher without a lot of success. And so I was looking for another test back down to that 86.25. So yesterday's IB, especially since yesterday's IB was the RTH session, didn't come into play. And just to clarify, for me, again, this one is for me, I typically will not use a previous day's IB range for any trade. I typically will not look at IB high or low and say there's a trade opportunity. However, if there were 2 or 3 other things, previous day low volume area, I could see a test to that level didn't work the last time down, and then I saw IB high or low, it would just add to my confluence, but I wouldn't use it as a factor in my trade. Does that make sense? Oh, absolutely. You're welcome. So again, I would look at it if there was something significant, something else significant there. So my trade plan, and we're going to open up in about 11 minutes here. My trade plan is, if we open up down here between, I'm going to say 86.50 and 85, I'm sitting on my hands watching the auction. Look at this thing, lag. It's unbelievable. It's the other thing that makes me a little bit nervous about trading, and I want you to heed this. Okay, this isn't about reading the print, but I want you got to remain objective. If you start having issues with your data, or your application like I'm having today, you need to have a red flag that your risk is going to be higher. You could get slipped in trades. You could potentially slip in your entries, get a worse entry. You just have to understand that your risk is higher. I mean, that's what you are as a risk manager. And when risk is higher, and if you're managing to a number, then trade accordingly. Drop your contracts, tighten up your stops, your ATM strategy, whatever it may be. And that can work against you too if you tighten up your ATM strategy, just simply because if you're getting lag and it's not just lag in the data, it's lag in the application, then from the time you hit, sell market, sell ask, buy bid, whatever it may be, to the time it actually transmits to your broker and sets, you may get a different result. So you just have to understand that you have more risk. All right, so if we open up above this level, right now we see weakness at 86.25, weakness at 86.50. We're about 9 minutes away from the open, and last time up we saw some strength at the bid at 89.50 in the pre-market, and here at 87.50. So this is the other thing I'll do is I'll look and I'll see a little bit of strength here at 87.75 at the bid. And so, and granted this isn't the open yet, but if we open up in this area and price starts moving higher, what I can see already in this activity is at this point there was aggressive activity at the bid, and so if this starts moving higher, my expectation is going to be maybe some stops, but a test back up toward into this range between closing swing low and closing swing high. So if we start moving higher prior to the open beyond, say 2-3 ticks beyond this level here at 87.75, I'm going to expect price to start testing higher. And right now in the pre-market, and this is the pre-market, and again, I know that anything can change, but right now I'm seeing weakness at the bid at the levels that we've already identified at 86.25, 86.50. Man, this is really slow. All right, I'm going to get some things back up here. Hang on a second. Make sure I have my 1 minute chart up. And my profile chart up. Another thing I want to make sure I have set is these. You can see how my my system is responding, that it's an application issue, not a data issue. Last one I want to get on here is an open bar. It's Ben, that's a great question. Definitely worth a restart. I restarted my computer earlier, and I'm getting this now. So I'm expecting that I'm going to have to do a database repair and maybe some other things to get this to smooth out. Looking at my applications, I'm not running anything else that is resource intensive except for projecting the room, and that that isn't when I look at my resources, that's not taking up. The one thing that is taking up a lot of resource when I look at my resource monitor is NinjaTrader. So I just have an issue with NinjaTrader right now. All right, I typically haven't had that many issues with NinjaTrader, but today, again, for some reason, I'm having it. And sometimes I find that if I go in and repair my database, um, I'll see a much improved level of performance. But I was getting this kind of lag before I joined the room and started projecting. All right, we got an open in 4 minutes. We're starting to move a little bit higher. This looks like it wants to go higher just by the activity in the print. You're seeing more activity at the bid here at 87.75. And when here's what you see. You see price bopping down, holding at 87.75, and then it pops up. This one from 800 to 1,026. Everything about this right now tells me that it's not done moving higher. And buyers are right now trying to push this higher. So if I were looking at a short at this level right now, there's no way I would take a short based on how this is auctioning. And maybe that's something I can do a little bit more today is as we find a level, just kind of talk through what I'm looking at in the auction at the different levels of the bid and the ask. That would give me insight one way or the other. Yeah, I appreciate that. I'll go, DB, I'll go back and look at that Microsoft. All right, I'll go back and look at it later. All right, we got about a minute. Before the open. All right, looks like we're opening up. We're going to open up right around this 87.75. I'm not planning on taking a trade right off the open here. I'm going to watch the 1 minute chart and see what kind of volume we start out the day with. Remember, Yellen, I believe, will be speaking in about an hour at Jackson Hole. Yeah. Actually, an hour and a half. And everything is locked up on me right now, just so you know. You can see my chart's not moving at all. Can you guys still hear me? All right. You can see my NinjaTrader is pretty much locked up here. Okay. I have an open at 87.75. I need to start closing more windows. Yeah. Okay. I'll tell you what I'm going to do. I'm going to go ahead and restart. So I'll log off and come on back, and I'll restart my computer. So you guys okay with a quick break, and I'll be right back? All right. I'll be right back. Things appear to me to be running smoother. Not as smooth as I would like, but better. All right, I'm going to go ahead and mark the opening swing here. And I'm still getting a little lag. All right, I'm going to have to do that fix, but I'm not going to do it now. I'm getting a little better performance here. Our open was at 87.75. I have that marked. Looks like the opening swing high was 89.89. And I have opening swing low at 85.50. Watching the profile take shape here. A little bit of a low volume area at 87.25. Yellen has just started speaking. Yeah, we tagged yesterday's naked VPOC at 89. I'll look at this auction to the downside. this doesn't look finished up here at 88.75. So again, we're in a higher risk area now that Yellen is speaking. We had an initial bump of volume right when Yellen started speaking. You can see that right here on the 1 minute chart, and you can see the volatility right after she started speaking. $88.75, $84.75. So we've got about 4 points that this right now is rotating in. You can see responsive buying here, some responsive selling, not as much, but responsive buying down here, responsive selling up here. And like I said, really looking for volatility between 85 and 86.50, 86.75, and you can see that's what we're getting here. Can you guys hear me okay? Okay. Somebody said there was no sound. All right, so I'd like to be able to tell you kind of one thing or another relative to this auction, but this, even in the numbers here right now, looks to be a holding pattern by both buyers and sellers. All right, we have one tick this. We'll see if we get up to yesterday's close. There it goes. Looks like this is going to continue higher. This is not finished to the upside. We just broke through. We might have a long at the open here. I'm sorry, not at the open, at yesterday's close, or right here at 89.25 to maybe as far down as 88.75. May have a long. You can see the momentum dots coming up through here. This, both the print and the profile do not look finished to the upside. Now, a trade here, you just need to understand that there is higher risk with Yellen speaking. At any given time, she could say something and this market can just tank. And I don't think I'm going to get filled on it. Late on it. So right off of opening swing high here. And I think this is going to start moving higher. Yeah, a lot of action started around 10. Yep. Hey, Gary, are you using the 1 minute chart or are you just looking at the print? Both. Good. Good. Yeah, I do not see any reason why this will not test 91 quarter and possibly higher. Just looking at news here. Job market still hampered. Calls for pragmatic policy. That's what we need, more policy to manage our economy. So she looked like she opened up saying that the current debate now is over when to raise rates. So that says that earlier potential for earlier rate raise is on the table. So we're moving down. We got a low volume area right here at 89. Weakness here. This would be, and again, anything can happen, but this would be a trade right in front of opening swing high. Now, nothing will surprise me this morning just because she's speaking. And again, I cannot stress this enough, is that whenever anything is going on like this, you just have to understand that your risk, I don't care how well you're reading the print, I don't care how well you're reading the volume profile and how well the auction looks to be working normally, your risk is higher. And so you need to make an objective decision about trading when your risk is higher. And if you get into a trade and you lose because something happens unexpectedly, you just need to understand that you traded in an environment where the risk was higher and accept responsibility for that trade. All right, I thought we'd see a test of 91 quarter. 91.50 is the overnight high. I will tell you that I am choosing not to trade now. What do I see in the volume traded so far? What I see is weaker volume, very much weaker volume, very neutral overall until Yellen started speaking, and then strength, more strength in terms of numbers, volume. So there's 91 quarter. Can anybody tell me why I was looking for a test of 91 quarter? That was a potential trade. Looking for, well, we'll see what happens. If this doesn't test back down through 89, 88.75, then we very well could make new highs here. Yeah, and yesterday, if you look in the afternoon, there were two attempts at 91.25 where we saw some selling step in, and then a brief move to the high at 92, and then a quick move back down to settle lower. So I was looking for that same test to 91.25 that happened yesterday in the afternoon twice. In fact, even though the closing swing was 89.75, there were two tests up to 91.25 with a quick poke through and then a move back down below it. And 91.25 is LVA on the higher end. Yep, very good. Wow, oil sure is making a comeback. All right, if I take a look at the profile here, see a low volume area here at 89. It's right where our opening swing high is. Volume point of control right now is 85.75. So if price starts moving a little bit of a finish to the upside at 91.25, if price starts moving below 89, 88.75 and tests back higher with weakness at the offer, strength coming back into the bid, I will look to take a short. And I'm going to be managing my risk. Got a little bit of a low volume node right here at 87 that could be an issue. In fact, I'd expect to see at least some bounce off of 87 or 87.25. If it comes through there, then I would start looking down towards VPOC and possibly lower on the day. So we're starting to come through that level. I want to see it come through 88.75. And what I don't want to see is a pop right back to the upside. Got strength at the bid. I have no trade here, and I'm because of the finish to the upside, this may go higher, but I'm not necessarily looking for a long right now. Got volume filling in 88.75 due to all this selling pressure. So if this pops down to the open, 87.75, comes back up, we get weakness at the offer, strength back at the bid here between 89 and 88.75. I'm going to look for short there. Like I said, 87 is where I would look for, 87, 87.25 is where I'd look for a bounce. I mean, if you want a scalp, this could be a scalp opportunity right off of here. Okay, I want to see this a little bit higher. There we go. So the selling is good. It's just not that strong. So I can do a sell here, and I'm willing to give up. If I can get in, I'm willing to give up a couple of ticks on this. Now I'm going to watch this print. If I start getting strength back up at, I'm not going to give this a whole lot of room. So I can see activity at the bid here. And what this is telling me now, if we start getting additional strength, I'm gonna cut this even closer. So again, the 87.25 is where I would expect to see some issues. If it gets through there, then I'm looking for 86.25, 85.75. So if it gets back down to 87.50, what I'm looking for this time is we had strength at the bid here at 88 last time down. I want to continue to see strength at the bid back down here. You can see a little relative weakness here. So again, I told you because of the risk with Yellen, I'm going to be managing my activity really tight today. So all I'm doing is managing my risk. Again, a little bit of strength here at 87.75, and then it went weak again down here at 87.50. Like I would have liked to have seen this test at least to 87.25. If it can't do that and starts moving back up, I'm going to bring this stop down a little bit more. Because there's definitely room to the downside. So I'm going to give this a little bit more room to the downside here. Remember, I'm working to manage to a target for the day. And the first thing I'm doing is managing my risk. So we can see this area. This is what I would have expected. In fact, I would expect to see maybe a little bit more strength at the offer here at 87.25, maybe 87.50. But if we start getting down through 87, then I would feel pretty comfortable with 86.25, 85.75. I'll just keep watching the auction at that point. So what I don't want to see in this auction, so as I'm looking at this, is I don't want to see price start coming back up here. And it easily could, but I don't want to see price back above 89 again. I got my stop right at 89.25. It's as much as I'm willing to give. I've got no risk in the trade now. But if I start seeing price, if I see price back up at 89.25 and any strength back at the bid, I don't want this trade anymore. And here's the reason, is because we had good selling coming in, right? Activity at the bid looked like sellers are responding, they're reacting, they're pushing. You can see the increased volume, and for the most part, buyers are relenting. See the weakness in the offer over here? Buyers are relenting. So if after this push, buyers start holding and they start coming back, then it's very likely we're just going to see rotation, and it may take some time, before we'll see this, if at all, see 84.75. See, what I don't like is now the sellers are letting up and they're beginning to relent. So I'm going to let the trade work, but I have no risk in the trade. And if it takes me out at 89.25, I've paid for the trade as well. Question about what do I see in the volume traded so far? It's a couple of things. I see activity at the bid. So I see that sellers are trying to push price down, and they're aggressive. The fact that they can't yet continue, and if they pop it above 89, starts to tell me that we may start to see these sellers get stopped and another pursuit to the upside and new highs for the day. Because what's happening then is that buyers are holding sellers, and if this starts creeping back up, and it may stop right here and turn around and go back down. But again, I've kind of trained myself. I've made up my mind. This is what I want. This is how much I'm willing to give back, and I'm not going to give in to, well, this could happen or that could happen. I'm here to manage my risk, get to a profit total, and be done with it. So again, what I see is I see activity at the bid as price was moving higher. Price moved up on relatively low volume, and then we had a lot more activity coming in at the bid. A lot of strength at the bid. Price moved down well. And so if buyers continue to take this, are successful at taking this higher, there's going to start to be some stops, and it's likely that that activity will push price back up into this area. Does that make sense? Sellers are either going to continue their and effectively move price, or they're not. And if they're not, then we're likely to get at least some amount of rotation, and I just don't want to play in that space, especially with Yellen speaking. All right, so it got taken out, but part of trading is just taking the opportunity, and I think I got up to 0.75. Yeah, got out a little bit early on this, but that's all right. So the next thing I would look at is what happens with price in the auction back up here at this closing swing high. We've now opening swing high had some meaning right here. Opening swing high had some meaning, but then sellers got aggressive. I don't think this is done ticking higher. All right, I don't think that this is done up at 89.25. This auction here up here just doesn't look quite finished to me, so we may start to see some stops going off and price continuing to move higher here now. So what do you see now in this? What do you see now in the auction? Anything unique about this? What do you see that's unique about this move back up? I'll give you a hint. Look at the bid. Weak at the bid. Very good, Ben. So when you see that kind of weakness at the bid, sellers are gone. Very good, John. That's exactly right. So this is what I think when I see that activity at the bid. And I look at this auction, I say, all right, we had a lot of activity, heavy activity at the bid to the downside, and price successfully moved lower with weakness at the offer. Now we've got an opposite scenario where we've got weakness at the bid and strength at the offer, and price is effectively moving higher. But all this market is telling me is that it's just sitting here in balance. And so I need to ask myself, is this a market that I want to trade in? And the answer for me right now is no. Not until she's done speaking and this begins to settle out and I can start to see some levels, where buyers and sellers are finding footholds. So if you're watching an auction in a market, it doesn't really matter what the instrument is, and you see price moving down, a lot of activity at the bid, but the one side is gone, just kind of relents. And then the opposite happens. Then we're likely to see a swing for a while in this area. So one of the things you could do is look, and when you see strength coming back into the bid, weakness at the offer at these levels, right, you could take a short and look to take this back down to the open, back down here. And what you'd be looking for in a trade here is you would be looking for strength back at the bid, and what you don't want to see is strength back continuing in the offer above. So I'm looking at oil as a potential instrument, and it is just flying around, likely to be highly volatile for a little while as well. At least that's what I'm reading in it. Might be a long around 92.83, 92.82 for those interested, but I'm not going to pull that over right now. It's too crazy of an instrument. So you can see weakness, you see strength coming back into the bid. Now what you'd be looking for in this is for the weakness to come back in the offer. Strength coming back into the bid, you start seeing weakness at the offer. And if you don't, so this is what I look for. If I don't see that, and right now this bid, the strength of the bid, I mean, it shows some strength, but the numbers are relatively pathetic. And then as it got down to yesterday's close, more weakness. No way, no trade, no way am I trading this. But does this make sense? What I'm talking about is you see the activity at the bid, you see the weakness in the offer, and price effectively comes down, and then you start to see just the opposite as price goes up. The likelihood here is that this is going to rotate. We're going to see a swing in these levels here until something changes. Because you have to ask yourself, and you got to kind of get yourself to almost doing this automatically, is when you see a succession of weakness, either at the bid or the offer, after a fairly even auction, you've got to ask yourself, why? Why would I be seeing such weakness in the offer? And then again, why would I be seeing such weakness at the bid as it goes back up? Because right now that should inherently tell you this is a sideways market. They want better locations to enter. That's exactly right, Ben. And right now, sellers are looking at the top of this range as a good location to enter. We can see buyers stepping away, and we're likely to see the opposite at the bottom. So again, like I said, I just made a decision I wasn't going to trade, but does everybody understand why this, in terms of an opportunity based on what we're seeing here in the auction, why this made a decent entry in terms of an opportunity out in front of this high? And the way you would manage this trade, and again, I just decided not to do this, the way you would manage this trade is if you get strength coming back into the offer here at 91.25, 91.50, the most likely place for this to test is going to be up here where your next short opportunity would be. So at a short at 91, you look at the potential opportunity to the downside, and that's 4 points. Your risk on this trade, you're looking at maybe 2-3 ticks, because if you start getting strength back into the offer at 91.50, I'd have my stop at 91.75, and I would just look to re-enter again. So I would be looking at a 3-tick stop on this. And Ben, your answer is exactly right. They want better locations to enter. So this type of thing in the print is a pretty strong indication that you're going to see rotation. Now look what happened here. Weakness, 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 weakness. Came down to that 87 level. The other thing on the profile is that 89 quarter level started filling in. It's no longer a low volume area. We do have a double top just outside of IB. IB has not been broken. So what that means to me is my next trade scenario is this. I have 2 trade scenarios, one to the downside, one to the upside. Currently IB is between 84.25, 91.25. So I am going to I'll make it chartreuse, something different. I can honestly say I don't think I ever heard the word chartreuse until I got married, and then I knew what it meant. I guess you could say it's a good definition of being domesticated. All right, so I am I'm looking at IB here, and so this is starting to establish my my potential trade. Why is this at 85.50? That's IB is down at 84.25. I don't know what I'm doing. 84.25, and below that, let me just scrunch this up. We have yesterday's low and the overnight low. And we might start to see this move up here. We'll see. So my next trade, and I feel this is great because now I can relax and wait for it. So here's top of IB. What I want to see is I want to see price come up above this, and if it does and hits 92, I'm going to watch the profile. If it finishes, what I'm expecting is we're going to see an intraday low volume area around 91 quarter, 91.50. If price jumps down really quickly below this IB level again, this is a low volume area intraday, I'm going to hold off. However, if we see price move up, we start to build out some volume above, and this remains an intraday low volume area, I will go long around 91.50 and look for this to kind of slowly creep higher. Can we go through the opening swing high and low? Yeah, I'll do that in a few seconds. My other trade is if price comes through here, and this is kind of interesting because on either side of IB right now, I have yesterday's high and yesterday's low. So if I'm going to take a short off a retest of IB, assuming that stays an intraday low volume area, or a long off a retest of IB, I need to see volume building out, and I really need to see price coming through these highs and lows before I'll take a short. Yeah, there's that low volume area at 87, though it's filling in. What I'm interested to see is if we get a little bit of a stop run down below this area, down to opening swing low here, 85.50. So with that, let me pull up my chart. Hang on a second. All right, let me look again here. Our open was right at 87.75. So here we are at our open. And the opening swing high was here at 89, right there. And the opening swing low was at 85.50. So can you see that? Here's our open. Sorry, right here at 8:30. We swung high to 89 and then swung low to 85.50. Yes, I'm using the 2500 chart. That's exactly right. That's what I use that for primarily. All right, so this, one of two things are going to happen here. This is just going to march all the way back upstairs. So this is a potential long. We got weakness at the bid. And all you would be doing in this trade if you were to go long is to watch for this kind of strength back down at the bid. I'm going to see where our friend Yellen is. Weakness again. So again, this is a trade opportunity, and if I'm looking, let's say I'm looking to get to 387, which puts me a little over $100 away from my target, I could knock that down to 1, and I'd be looking for price to move all the way back up here. So looking for a 4-point move. And so what I'm asking myself is, can I get my target with one contract? And based on the risk, and I'm seeing activity still at the bid here, and my target, and hopefully you can start to see how these kind of come together, I can start making decisions. Because if I lose 3 or 4 ticks with one contract, that's not going to, I'm still going to be up for the day. I'm managing my risk. But the potential is here and higher. Does that make sense? And I'm a little late now, but the risk reward on this trade is pretty good. And again, I would be looking to take that all the way back up here. So I'd be looking to take a 4-point trade, which would be, $200. It'd put me, $15 or so away from my 500 target. And it would also allow me, by reducing my contract, to, if sellers stepped in, did a stop run, or just started pushing price lower, I was wrong in the trade, it significantly reduces my hit on my basis for the day, my profit for the day. So as I manage a trade, I don't just take a standard, I manage my contract size relative to what I'm trying to get accomplished and where I think the trade has potential to go, and if it'll take me closer to my target, et cetera, et cetera. So for example, if I were down 150 right now, there's no way I would take a trade with one contract, because that does literally nothing for me. If I were down $150, I'd be waiting for the trade for IB to break, and then trying to take it higher or lower. So part of your trading strategy really should have a basis in what your profit target is. And this looks like we might take another jaunt to the upside. We'll see. BPOC is right here at 87.50 now. This is one of those scenarios where I wouldn't be surprised to see a quick move down and then back up. Kind of a washing out of these short-term longs. Because remember what's likely happening now, not the only one seeing this range. And so others are looking, you can see buyers stepping in, buyers. You can see the strength at the offer here. And when I say strength, I mean relative numbers. I mean, look at what's happening over here at the offer. 1388, 97, 427, 1619, 3604, 2477. So right here, we started getting a significant amount, even though it shows neutral in the color, relative to what buyers were willing to commit to before, there's strength in this auction. So the context, is this making sense what I'm saying? The context of these buyers are a little bit different than the last time this moved up. But the last time this moved up, and I want to make sure you guys get this, the context of the last move higher was that the bid started going really weak. And what are we seeing in the bid right now? They're kind of matching them, right? You guys can hear me, right? I mean, you guys tell me if this isn't valuable. I don't need to go through it. But if it's helping, then let me know. I'm just trying to go through what I look at, and when I'm determining context in a market, I'm not just looking at the current bid and offer. Not just looking at the current bid and offer. I'm reading the story. Here's my context. Up, weakness at the offer. Down, weakness at the bid. Down, weakness at the offer. Up, weakness at the bid. We have rotation. Market looks like it's rotating. Now we're down here and something's changed. Okay. Good. I don't mean to force you to answer me, but I want to make sure that, number one, what I'm telling you makes sense. Number two, that it's valuable. And do you kind of get my thought process as well relative to trading to a target? Because what that allows me to do in a trade, like the one I took short prior to the open, is to say, you know, if I get I'm at $150. If I'm at $150, it puts me $350 away from my target for today. Might this go further? Yep. So if, let's say I'm short and I run into something like this, weakness at the bid, strength at the offer, looks like it might be coming back, and I'm up $150 or $200, boom, close. Close, close, close. I'm on my way. I'm almost halfway to my target with that trade. What does that start to do for my mindset the next trade I take? Helps me be more patient, be more objective, take less risk. Not every trade is the same relative to your risk. Peaceful, easy feeling. Nah, I'm gonna have that song in my head all morning. So when I said I wouldn't be surprised to see, you know, it looks like it's starting back up, but I wouldn't be surprised to see this come knocking down, do a stop run before going back up. This is why. I mean, the buyers were being held. They were being matched, held and matched up here. And this is setting up for a perfect stop run. Or it could just drive lower and start to trend lower. Now I think 86.25 down to 85.50. That's where we were talking about this morning, down to about as far down as 85. So this is where we have a longer term low volume area, right in here. I wanted to take this. I took the trade here, but I wanted to take it. I'm good at 85.50. So if I start seeing strength coming back into the offer down here at 85, I'm just going to get out of this trade. And now I have another reference point here at 85.75. And if price can't get beyond 86.75, I'll want to be out. So you can see the strength coming back in here. So what I'm looking at in this trade is if I take 3 ticks with one contract, I'm okay. I'm still up for the day. My psychology is good. I'm okay. And if it comes down through here, 85, then we're likely to see a test of yesterday's low at 83.50. I don't really want to take that down. So I see weakness here, and this one actually is pretty easy for me. I can actually move this up a little bit more, and it looks like this is going to get stopped unless buyers really stepped in. But I saw some strength here at the offer. The stop run scenario set up, and so this was, from a risk reward standpoint, in my mind, a great trade. Great trade opportunity. It doesn't mean that it's going to work, but if it does work, I'm likely to get 2 to 4 plus points out of this. And if it doesn't, there you go. I'm going to take 2 ticks. Big deal. So trading with one contract, and because of the risk reward, well, I got slipped. 1, 2, I got really slipped on that. Oh my word. I got slipped by 2 ticks. But you see what I'm doing? I didn't know if that trade would work for sure. My stop run scenario set up. I saw strength coming back in at the bid. Yeah, and so I had to give it. I wanted to give it the opportunity, and I had my stop higher. But even so, I'm not. I haven't hurt myself today. And this is still another opportunity for a long, right off of yesterday's lows. But here's IB at 84.25. We're through IB. We have a little bit of a low volume area at 83.75. Building out some volume. Got to finish to the downside, so you got to be careful there on the profile. Bring that over here for you. See that low volume area right there at 83.75? So the trade short would be right here at about 83.50, which is yesterday's close. I mean, low of day. So you can see weakness at the offer, strength at the bid. The only issue with this is we have to get past 82.25 in this trade. Have to. If we start getting more strength back up here, then this trade is going to be at risk. And now I start to look for my longer profile, and I look for a target. I got a low volume area down around 80. If this bounces off of 82 and can't get through 82 and moves back up above that low volume area, then this trade is toast. But I have another low volume area around 80. So what am I expecting? 82 is, again, the data is thin, but 82 is a little bit of a high volume area. What do we expect around high volume areas? Rotation, exactly. My system's starting to get some lag again. So I'm expecting, I wanted to take that off at about a point here. I'm expecting rotation around 82. What I want to see this activity, right? So this activity right here is telling me that sellers believe this is a fair price, otherwise they wouldn't be engaging like they are. Fair price. I want to see rotation around 82. That bugs me. My system is bogged down again. And then the next low volume area is down here at 80. So as long as we start getting rotation and volume in the profile around 82, which we are, then I'm going to start looking for a test down to this 80 level. If it doesn't happen, again, I'm going to manage my trade. My system is bogging down again. I'm starting to get some slow response time. Okay, Wayne. Sorry about your internet issues. So I really wanted to take that off down here at 25, 82.25. But I'm starting to get some lag again, and that killed that. So if this pops above 84 again, I may very well look for a long around 84, 84 quarter. IB is at 84 quarter. IB low. And you can see it's not strength. I mean, from a color standpoint, this is relative weakness, but you can see more activity at the bid. So this is likely to tick up to at least 83.50. There it is. And I'm going to get stopped on the trade. But that's at break even. Now I moved that down because this was likely going to stop me out. I will see what happens up around IB. But I have another long scenario setting up. There's IB. IB low at 84.25. Strength still at the offer. Nothing you can do about that. Again, all I can do is manage to my risk. Actually, IB was right. 84.25. Was a little bit of a low volume area there, so that was a potential short again off of IB low. So when I look at the profile here, we have a low volume area right there at 83.75, and then right at IB low, just above IB low at 84.75. So this would have been a decent risk reward. The only reason I didn't take it is because the strength that was coming back into the offer. Because if it gets up through 84.75, 85, then we're likely to see IB again. We actually may have a neutral day as well, meaning trading on both sides of the IB. The other thing I'm not seeing now, look at the offer, even though there was, or the bid rather, even though it shows strength in red, buyers are kind of hanging back. So I want to wait till this plays out and look for a long, either above 85 to 85.50 on a retest, or potentially another short. But I want to see this play out. So we got weakness at the offer, strength coming back in the bid. That's a potential short. And when I say potential, I mean that's an opportunity. And the way you would manage that is, if you see activity, you had weakness up here at the offer at 84.75, weakness at 84.50. If you started getting strength back, you can simply manage out of the trade. And so again, I'm managing to a number. This has potential to kind of come through 81.50 all the way down to 80. So the risk reward on this trade was maybe 2 to 3 ticks for a potential of almost 4 points. Likely to see some bounce off of opening swing low here. The question is whether or not it'll be a significant bounce or not. Okay, so we're back above this level. Now we might see a long around 85, 84, 75, possibly down to 84. Right where this momentum starts. So I look at the beginning of this momentum. Well, let's just go ahead and do this, okay? I look at this chart. 84.75 is a low volume area. Potential trade long right in front of it to get filled at 85. But I would need to see it pull back. So I'm going to be patient and wait. Now it used to be that I would take a trade right here. I would see this print and I would see weakness and strength and I would just get in at this level, 85.50. I better stop talking and start trading. But now I kind of want to wait for my levels, 85, 84, 75. And the only reason I really want to do that is because of the risk reward. Seeing a little more strength coming back into the bid. So I want to show you this. Where is it? Right here. So we got a low volume area right here. So there's a potential trade-off at 85, right, long, and it's working now. The better trade is off of this low volume area. If I take the trade at 85, I need to put my stop at 83.50, so that's a 1.5. So what I've done now is I've increased my risk. The better trade, because I can manage my risk, and when I talk about a better trade, I'm talking about risk reward. The better trade is here at 84 in front of this low volume area. It was a previous test low of the pre-market as well, this area. So that, from a risk reward standpoint, is a better trade. However, I may not see it. And this is where you have to make a decision about either being patient or taking more risk. Yeah, I have a little bit of lag going again. So 84.75 was a potential long, yes. However, I liked the lower, that low volume area at 84 a little bit better because it helped me manage my risk better. And if I'm going to get in with two contracts, remember I'm managing to a number for the day. If I get in with two contracts and I'm looking for price to move higher, I can hit my target for the day. However, if I get in, let me just go through this. So here's my rationale. It may not be right, it may not work out this way, but here's what I'm looking at. If I get in at 84, my stop is maybe 3 ticks. Because if it starts coming down through here, it may just keep going lower. If I get in at 84.75, 85, now because of this low volume area, I need to put my stop still down here at 83.50, 83.25. So now I'm looking at a 1.25 to 1.5 point stop, which with two contracts is likely going to be 125, 150. And now I've really eaten into my profit total for the day. Does it mean this trade won't work? No, and you can see right now it's working pretty well off of this level at 85. But I'm not just taking trades. Again, this is where comes in managing to a profit. And honestly, I would rather walk away with, and this is just an objective decision, I'd rather walk away today with 237.50, and this trade's working great, which is, it's okay, it's fine. Where do you expect price to go? Right there, 87.50, right? VPOC. But I'd rather walk away with this than have got taken out another 150. Now I'm down to 80, 87.50 for the day. And now my emotion state is, my psychological state is, oh, I got to get that back. I got to get that back. Oh, I was up. Man, I was up so well, and now I'm down. Or I'm not down, but I lost it. I got to get it back. And that is going to make me less objective. But you can see, right? So the other thing I could have done is I could have taken one contract here, because if this trade works, I'm likely to get 2.5 points VPOC up here. So the other thing I could have done, because remember I'm managing to this number, is I could have taken the trade here because that was a trade opportunity. We talked about that. If it gets above 85, I'd look for a trade long at 85. And then if it starts coming back down, I could have added another at 84, or just said, no, this is too strong to the downside, and my risk then would have been with just one contract. Does that make sense? So what happens is when I'm managing to a number and not just to a level, like this is a good example where we have two potential levels. When I'm managing to a number, it helps me, and I'm being objective, it helps me identify additional strategies that'll help me get two things. It'll help me manage my risk better, and it will help me get to that target that I want for the day. Because I'm always thinking about, okay, how can I get there? How can I get there? What's it going to take for me to get there? How can I get there to that number? And so that would have been another option, because I would have limited my risk with one contract and still given myself an opportunity to take a long at 84, 83.75 if it presented itself. And honestly, so what if I got in here at 80? So what if I got in here at 85? It comes up to 87. Went through VPOC already. 85.75. Actually, VPOC was here at 87.50. Gets up to 87.50, so I've got 2.5 points, and it goes weak at the offer. I just closed my trade, 2.5 points with one contract. That's $125. I'm now sitting at 350. I'm $150 away from my target for the day. So using this method of trading and managing to a number, managing to an objective for the day, gives you added flexibility and objectivity in terms of how you want to enter and manage a trade. All right, VPOC has now moved down to 85.75. See if we get another test of 85. The volume profile shows a little bit of a low volume, and so I'll bring this over. But you got to pay attention to this. There's a little bit of a low volume area right here at 87, which is where price pretty much stopped at 87. But if it gets through there, it's likely coming to 87.50 and possibly a test back up to 89, 89 quarter. Didn't see that. I wasn't paying attention, but this is about 10 points from the top of the day. Right there, 81.50. One tick away from 10 points. And we all know how the ES likes to move in 10-point increments. Oh, good, David. It's important for me to kind of go through my thought process, and it's really important for you to know that as I'm making my decisions in my trades, whether I'm getting out of a trade, taking risk off, adding risk, taking profit, that my context is not only the market, but it's also my profit total. Because even if nothing else really sets up that I like for the day, that's a better number than being down 200 or 300. 237.50. Won't be my target, but it's a better number. And by being patient and managing my risk and taking profit, most days I'm going to go home green. And I can tell you that I couldn't say that before. But all of these tools, the volume profile, getting the context, being able to read the print, gives me everything that I need to make my objective in a day. I can't always say that the market's going to cooperate, and it might do some unusual things, but I have every single tool I need here to be able to make my daily objective. So now you can see the additional activity at the bid. So you'd expect price to come down a little bit. And here was our first level at 85. Let me bring this over again. This is still a long opportunity at 85 here, 85 quarter, though VPOC has now moved down. And then again, the next one is at 84, 84, 83.75. So this is still an opportunity here at 85, and I could go long one contract and do this, the thing that I talked about last time, which was go long here and then try to go long again at 84 if it comes down to 84 because there's a low volume area right here. I will tell you that I like it less the second time with weakness at the offer at the top. However, it's still a valid area. There's an echo in my mic now. I haven't done anything different. So this is a tempting long, off of 85 here. I still would like to see this thing come back down one more time. Good question. With VPOC moving lower, unfinished auction to the downside and volume profile, is it fair to look for a short at 83.75? So if price, and that's great, that's awesome that you're thinking about that. If price drops below 83.75, yesterday's low of day is 83.50. If you have an unfinished auction to the downside and you were looking at a potential test of 80 anyway, then absolutely you're looking exactly at that right thing. What you'd want to see is you'd want to see price passing through 83.25 with activity at the bid, pushing it down through, showing conviction, and then that test back up here for the short. But that's exactly right, Sanjay. Good job. Would the fact that there's weakness at 84.75 at the bid play in your context at all? For a long, yeah, I mean this is a good setup for a long here at 85. This was the level I was looking for. I just like things less the second time, but it worked. Like I said, it's still a valid level. It's a valid trade. So yeah, absolutely, this weakness, this strength, just added to the potential for the long. And then I think you guys are getting this now. So let's say I took the long at 85. What would I be looking for in that trade to manage that trade? Well, if it started coming against me, what would I be looking at? If I'm long and I'm managing risk, right, strength, very good, Ben, strength at the bid, exactly. And if I saw more strength, weakness at the offer and strength at the bid, if I saw that coming against me, I would look to get out of the trade. So it's not a surprise to you that price bounced off of this level, right? 84.75. I mean, you can clearly in the profile see that as an opportunity. There's a low volume area right there. And my expectation would be at least 87.50 where VPOC was. In fact, we may see VPOC move back up here, 87.50. Now we're likely to get a bounce off of this 87.50. Where VPOC was. And what you'd want to look for now is there's a little bit of a low volume node here at 87, just to look and see what that auction does there at around 87. And remember that psychology plays a huge factor in your decisions. The more objective you can be, like here, to say, I'm just going to take this trade at 85, it doesn't mean you're going to win all the time, but the better off you'll be. I will tell you that this was, like I talked about at the time, this was a good trade setup to take the long. The fact that it was a second time down, I liked it less. And it's working good, working very well. Now, one of your clues to know, not to know, but to anticipate that 8750 may begin to be VPOC, may change back up to VPOC, and we'll see rotation around this level for the day, possibly back up to a new high, is you're going to want to see activity through 87 and back down to, maybe that 80, as far back down as 85. But you're going to want to see rotation around 87. If you start to see rotation around 87, that means that now in the current context, we're getting acceptance up here, and I would start looking for higher tests. Stay away from oil. Oil is setting up to oil is setting up to move pretty big. And that's, I can't tell you if it's going to move to the upside or the downside, but looking at the auction in oil, it is looking to set up to move up or down pretty strongly. See if I can bring up a chart. Okay, I'll show you what I'm looking at. If you guys interested in seeing oil, what I'm looking at? Okay. There's oil, and let me go to a structure chart first and just build you a volume profile. Okay, we have, just to get the context here, you see VPOC down here, 93.15. This is where the overnight low or the initial swing low was down here. We had this big move to the upside. Look at what's happening here, right? This is getting rotation around VPOC. If we get to a point where VPOC price stops coming through VPOC either to the upside or the downside, then any likely break of this area down here is likely to see price just crush lower. Whereas if price starts bouncing off of 93.15, it's likely to move. It very well could move well beyond 93.84. So the other thing that I'm looking at with that, so my context is, we had a big move up, came back down, now we're rotating. The question I have is this balance to move lower, or is this the other side stepping in, holding more sellers? Because if they are, in a couple hours from now, if price stays around this level, if sellers continue to get hold, at the end of the day for oil, we're going to see price just rocket in that last half hour, likely back up to the top and possibly higher, because there's going to be a whole lot of short covering at the end of the day. So price is most likely to move strongly in either direction. It's just going to be a matter of how long, how much buyers really hold. If price starts getting back below this level, we saw a buyer step in here, we saw a buyer step in here. There was a little bit of a slip right there. If we start seeing them, price start to get below 93.04, that is an initial signal that we might see lower price. So I'd start watching this level at 93.04. So the other thing that I'm seeing, if I get out of a structure chart, is look at the activity at the bid down here. 150, 94, 101, 143, 120. In oil, these are pretty significant numbers. 290 down here. So we're seeing a lot of activity at the lows of the day. So you know this is more initiative selling, not necessarily buyers getting out of contracts. And we're seeing a lot of it. If buyers continue to hold all of these sellers, I mean, look at this. Look back here. 184, 142, 159, 109, 248. I think that's 452 down here. The longer buyers hold these sellers, the more they will cover towards the end of the day. And their covering will shoot price up high. And you know, if this breaks this low volume area right here at 93.50, you see that low volume area, could easily make new highs for the day. So on oil, I might look for a long. If it breaks through 93.50 and that stays a low volume area, I might look for a long, taking this up 93.84, 94.05, up to that level, those levels. Does that make sense? So, and that's just, you know, looking at the auction. These sellers right now are getting held. They keep pushing, but they keep getting held. And again, the closer we get to the close, which is yet some time away, but if this doesn't move lower towards the end of the day here, we keep seeing price bouncing off of 93.05. It can tick down a little bit from there, but as long as we continue to see price rotating through 93.15, that means that price is getting accepted down here. And trust me, if this stays this way after 1 o'clock Central, 2 o'clock Eastern, you're going to see price moving at the end of the day on oil higher. All right, weakness, weakness. Come on down. One of the things I want to do for you guys, if you're interested in it, is I want to do a pre-market since I had to shut down and take a while to kind of rebuild the database and reboot. It took a little bit of time out of today. I'd like to do another, just do a pre-market session on Monday morning. You guys okay with, you guys up for that? We did a pre-market session Monday morning, 7:30 to 8:30. I just don't want you to feel like you got ripped off. That's too much. And you know, I'm likely just to do more ad hoc early morning sessions with you guys. So, you know, our goal at OFA is that, you know, not just that you take a course, but that from time to time we're going to do more sessions to make sure that you get this, and it's something that you can repeat. You can start to identify the levels. You can start to take the trades. You can start to, you know, work towards your targets, manage your risk, understand how and why you're doing that, and be great traders. The goal is to get you to the point where you are using this tool to be successful. And again, you've got everything you need in this tool to do that with. So I know you initially signed up for a week course, and not a week like W-E-A-K, but week, W-E-E-K. It's a strong course, but a week long. But again, the goal is not just to get through the course. The goal is to change the way you trade and use these tools to improve the way you trade. So we're going to do more morning sessions. Yeah, and you know, I really do like doing this training, and you guys have been, as a group, you guys have been just incredible. So patient, and you know, your willingness to learn, do the homework, answer questions, get involved, really makes this enjoyable, and I'm more than happy to do the additional sessions. Yeah, you're welcome. Now, with that, I've got my my daughter went off to college. My wife brought her down, and she's coming home, so I need to work on getting to the airport to pick her up, because she won't be real happy if I let her sit at that curb for a while. Not able to get the pre-market sheets download? Okay, thanks, DB. So here's a potential long coming up right here. Boy, I'm just, let's see all the activity coming back in at the bid. There's a part of me that wants to see one more failed push to the downside before I went long. Well, this is a good start, Edmore. This is a good start. Yeah, this could be a pretty good long right here. It's just starting to get, the auction's starting to get a little more two-sided for me here. There we go. Good, 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 good. That's why I waited. Come on now. Come on down. Come on down. All right, with that, I think I will go get ready, and we'll plan on Monday morning, 7:30 Central, okay? Okay, the other thing we can do Monday morning is kind of go through the open swing and on oil. And I can talk through what I see on oil in the auction during the open. Does that sound good? Okay. Yeah, oh, you're all very welcome. You guys are great. I mean, seriously, this has been just a phenomenal group of people, and it's been great to work with you. So happy to do it. Okay, I just got a notice I got to get going. So I will talk with you. See you Monday.